All right. Good morning, everyone. This is Brian, and we're here for Forex Live. Today is Tuesday, November 5th, and it's 9 a.m. Eastern. Ready to get going. Before we get started, it's always important that we let you know that somewhere around here, we have a disclaimer for you. Let you know that unique experiences and past performances do not guarantee future results. I think everyone on the call understands that already, but just in case, I just do want to remind you that trading involves risk. And we should never trade with anything other than risk capital. That really is what drives us to make some poor decisions sometimes regarding our entry points and holding on to trades. We start getting focused more on the return than we do on the actual quality of the trade. So take a second to read through that, and then we will get started with our trading day. All right. Should be long enough. All right, so what are we going to be doing today? Well, as always, we will be going through our daily regimen for live trading and applying that under live market conditions. So we'll be utilizing the steps that Forex Joe's given us for a consistent method to examine the market and enter the market, and then we'll apply those under live conditions to in conjunction with our daily report and Forex alert to find some trades. So if you guys don't have a copy of that open, be sure you download one, have that maybe open on your desktop, whatever you need to do to have it. You can find it here from your members area by going to Forex Live. You can click on Schedule or Downloads. It's a few different places, and then just click, whether you want it in Word format or PDF format, and then from there you'll have it in front of you. So we typically go through 3 pairs. We'll do the Euro USD, the Pound USD, and then we'll kind of flip a coin and see if we're going to do the Aussie or the Yen for the final pair. So to get it started, let's jump right into it. Pair number 1 is the Euro USD, and we'll start collecting some data and see what we can find for potential trades. So current price on the Euro USD is 1.3466. And our first stop here is to check out our channel information. So to do that, we're going to open up a copy of the daily report. And for those of you that are brand new, the daily report can be found here by going to Forex Alerts and then clicking on Daily Report, and then just simply selecting the top link that comes up, and that'll open in a separate window. It'll give you a file that looks like this, and we'll have our daily report. And from this, we're able to see that we can see what our channels are. So we're concerned here with what our channel top and channel bottom is on a daily level. And right now we're seeing that we have a channel bottom at 34.77, and we have a channel top at 35.58. Support and resistance levels, well, let's see what we've got. We've got 34.74 right near where we're hanging out right now. And then we've got 34.42 down below us, and to the upside, 34.83. Followed by 35.23, and then of course we have our 35.58, which coincides with that channel top. But the important questions here: are we trending or are we oscillating for the day? It looks like we're in a downward trend for the day. That's confirmed when we ask the question: has the channel been broken? Have we broken below 34.77 or above 35.58? And the answer there is yes, we absolutely have. We have broken and closed below 34.77. So that tells us that our channel has been broken. Next up, average daily range. What's our average range? Well, today we've moved 61 pips. Average range for this pair under normal conditions is about 100 pips. However, recently it's been closer to 70 to 80 pips due to the range-bound markets we've seen under our current trading conditions. Doesn't mean it can't move more. It just means that recently we haven't seen it move a whole lot more than that. News, our next item of business. Do we have any news coming up? And we like to use Forex Factory to check that. You might use FX Street. There's a ton of news sources out there. Doesn't really matter who you use. Just matters that you take note of what news events might be coming up. Simply because we don't want to jump in front of a bus here. If there's a major market-moving, high-impact news announcement expected, then you probably don't want to enter a trade at 9:55 with this manufacturing report coming up at 10 o'clock. There's a high opportunity that we could get whipped out of that trade, or that might be the catalyst that changes the entire direction of the market. We don't really know. So, it's better if we've got news coming up in a few minutes to step aside, let the news occur, and then wait 15, 20 minutes and enter the market at that point when things have settled down and get some actual direction. So for news, yes, there is news coming up. There's news at 10, so there's news in about an hour that we'll need to be cognizant of when we enter these trades. And then finally, the last thing that we're going to capture, last bit of data we're going to capture anyway, is to find out what is the futures market doing. And again, for those of you that are brand new, we always look at the futures market because this lets us see where the lean is for dollar strength or dollar weakness. And we can look across pretty quickly. finviz.com/futures gives us a great heads-up dashboard for looking at this. Today is very flat. Typically, what we're looking to see when we look at this is we're looking to see, what's the Dow doing, what's crude doing, what are gold and silver doing, and that will typically give us an indication of what the dollar is going to do. So when we see money flowing into the Dow, into crude, into gold and silver, we typically see money flowing out of the U.S. dollar. And then conversely, when we see money flowing out of these items, we see money flowing into the U.S. dollar. We're closing out positions here, and we're holding those positions liquid in U.S. dollars, which causes the dollar to strengthen. So it's important to know this. Today is very mixed, though. We're just seeing kind of across the board, not a lot of lean one way or the other. It's a very, very mixed market today so far. I mean, there's a slight positive to the dollar simply because the Dow is dropping. Dow's down, dollar's up, but not significantly. There's not really a lot of movement one way or the other presently. So we want to be cognizant of that. So a mixed futures market, that's tough going in because that means we can see whip either way. And chances are this entire week we might be very range bound as we come up and are coming into non-farm payroll, which is Friday. So we might end up with a very range bound market this entire week. We'll see. But right now, not giving us a whole lot of hope for big moves today anyway. Not that we won't see them later on this week, but right now doesn't look like much is happening. All right, so what do we have? Well, we captured a bunch of data. We got our channel information, our support and resistance information. We know if we're trending or oscillating, if the channel's been broken, what our average range is, if there's news or not, which we know there is news coming up, and then we had to look at the futures market. So now we've gathered all the data we need to gather to start making educated decisions about where we'd like to enter the market. So let's pop back over to our charts. And what we know here is we know that we have a support resistance level here at 34.74, and we also have that shouldn't really be red, should it? I color-coded that red looking at a 3 of 3 channel yesterday. All right, so we know we have a support resistance level here, in this case resistance level at 34.74. We also have a channel bottom at 34.77. I'm going to go ahead and take 34.74 over that simply because using our Fast Track Trader software, this is a thermal grid that we've moved through now, broken below. So and right now we're also seeing that we're in kind of a range bound market. We've pushed down, we've broken below what was a support level. Now it's become resistance. We've broken through it, never really came back. It's retesting it presently, and we'll see if we have some trading opportunity there. So just using Forex Joe's methodology, we're looking for pretty basic support and resistance trading. It's the KISS method, right? Just keep it simple. And what we'll look to do is we know we have a number here. Forex Joe gave us a number. The price is broken, and what we would expect it to do is come back and retest that level at least once or twice, and give us an opportunity to get in. So what we're going to do is we're going to utilize our chart trader software. That must be an order on from last night. I'll need to cancel that. We have our chart trader software, and what we'll do is we simply move our sell line right over here to 34.74. Move our stop loss line where we'd like to have that, whatever our risk typically what risk level we're comfortable with, and then move our take profit. Now, for me, I typically don't risk 20 or 30 pips to make 8, so I try to keep my stop loss and my take profit 1 at a pretty even distance. Once that's in, we can click here, move to sell, and it'll just take it a couple of ticks over in the marketplace, and we'll have an order on and see how that plays out. So, right now we've got our order parked here at 34.74. We've got about an 8 pip stop loss and take profit for 8 pips on this first one, and then I'm stretching out a little bit for take profit too, seeing if we can't push down towards this next thermal grid down here at the bottom. So we'll see how that plays out. We could push this high. I mean, one trade I really like is retesting the Asia high or Asia low if we've broken below it. And this is a good example. We've pushed below here, and I really like to typically trade off of this Asia low. So if we pushed through and we haven't retested it yet, typically, doesn't happen always, but typically price will come back and retest at least this area before it moves down. I'm picking this 37.74 over that. It's a red thermal grid, and we'll see how that plays out for us. So there we have that trade on. As far as a buy order, I don't know that I'm really looking at a buy today. We'll see. Whoops. The numbers we have here, we do have 34.42 on Forex shows support resistance numbers. So this is a support level down here at 34.42. Let's just look top to bottom. And it puts us about 80 pips under the range-bound markets we've been in. That could be a good spot to look for a reversal. So let's go ahead and park that. About 80 pips there. We haven't been moving a whole lot more than that. If this were a regular market where where we're seeing 100+ pip moves, I would probably be a little bit more leery of parking a trade there. Let's just get this moved. But in this case, given where we currently are with this market being so range bound in that 70 to 80 pip range, I'll go ahead and see how that one goes. If we do push down to 34.42, we might stall out right here and be able to get a couple of pips on a bounce. So I'll look at that as well. 34.73. Where my stop loss is. I think I should have reset that chart to enter my buy. Yeah, it somehow is picking up this unless it's hiding behind here. There it is. There's my stop loss. There we go. Oops. Come on. I just moved a few things around inadvertently here and seem to be having a bit of a technical problem. What is going on? It shouldn't be putting a stop loss for my take profit level. That's really strange. I don't know why it's doing this. I've never had this happen before. It's having a bit of an issue with this Well, kind of at a loss here. I've never seen this happen. I'm actually kind of at a loss right now. I had 2 orders on from last night that we parked, and they didn't trigger, and I had closed down my computer, but didn't close down those trades. And here we are with a little bit of an issue, and I can't seem to get my take profit to move back up. I'm going to have to reset this chart and re-enter those orders. So let me do that real quickly. Sorry guys, just take us 1 second to reset this, and then hopefully we can get this reset and clean it up just a little bit, and then we'll be okay. So if you can just bear with me for a second, I'm going to get this sorted out. Really have no clue how how that happened. I don't get why I've got 2 lines here either. I don't have any orders on. Very, very strange things in the works right now. Somehow I tend to have 2 stop loss lines, and I don't. Oh, it's listing a take profit. I'm going to cancel this order out altogether, and I'm going to start fresh. So I'm canceling everything altogether, and we're going to start fresh, reloading my template, and there we go. Totally reload the template, and now we can get started again. So it'll take just a second for this to tick over, and now here we go. So we had a sell order. So I closed that sell order down. By the way, I just closed everything down so I can restart it because it wasn't going to let me take profit. It was listing a hard profit as opposed to allowing us to take profit in thirds, which is what we would normally do. So we're going to get all this moved back to where we had it before and see if we can get our trade set up. So we had a sell order on from 34.74. And then we have a buy order that we were placing right down here at 34.42. And we had the buy order. So the sell order, we're at a thermal grid. So we took that. It's a support resistance level. It's also a thermal grid level if we're using Fast Track Trader, and it's also right there, 34.77, 3 pips away, was our channel top, or channel bottom rather. So we had 3 things kind of lining up for us, so we went ahead and took that trade. It probably won't get me back in now that I shut it down, but that's okay. So get us back into that trade if we can. So we took that trade. Now we're also going to park a buy down here at 34.42. The reason we're looking at 34.42 is that's actually a couple of reasons. Is number one, it's a thermal grid, so it's a red grid. If we do push down this far, we would expect it to bounce. And secondly, we're looking at this level because if we do move, we look top, from the top up here, top of the session, down to 34.42. That's about 80 pips. And under these range-bound conditions, we're typically moving 70 to 80 pips. Doesn't mean we're not going to move 130 today. It just means typically we've been moving 70 to 80 pips, and as a result, we can feel comfortable in parking a buy there if it does get down that far and push that far down. So I'm going to go ahead and enter a buy down here at 34.42. So now we've got 2 trades on for the euro, and I'm sorry about that little mishap. I didn't reset charts, and it was acting like we had a couple of trades on, which isn't cool. All right, so there we are. So now we've got that set. We don't have the funky take profit that was showing up there. We were having a kind of just a hard-coded take profit level, which we shouldn't be showing that on our chart. We're taking profit when we get to the line, not at a specific number that's going to take all of our trade off. All right, so we've got that one on. Next one up is the pound USD. And first stop is our channel information right over here, daily report. And what we're seeing here is that we have a channel bottom for the pound. Well, I guess we need to see what the actual price is. We're able to see that price is currently trading at 60.44. And we see here that we have a channel bottom at 59.34. And we have a channel top at 60.10. And then right above that, we see that we also have a 2 of 3 channel at 60.44. So we have 60.44 as a 2 of 3 channel, which is actually a pretty significant level for us. We've seen price react pretty well off of 60.44 a few times now over the course of this year. Support and resistance information, well, what do we have? We've got 6,000, no surprise there. 6,000 is a big level. Down below us, you've got 60.22, and then we have 60.76 above us if we continue to the upside. Are we trending or oscillating for the day on this pair? Well, we were oscillating. We had some news. It looks like we just shot this thing up, and now we're hanging out at 60.44, which is a key level for us. So we're in an upward trend for sure, but I have a feeling we're going to be oscillating as the day continues. Has the channel been broken, though? That's the key question, and the answer there is yes. We have broken above 60.10, so the channel has been broken on an intraday level. Average range, well, today we've moved 114 pips, and our average range on this pair is about 80 to 90 pips presently under current conditions. It is getting a little bit further from time to time. Under regular trending conditions, we see it move 100 to 110 pips, but right now it's 80 to 90. News, we know there is news coming up. Yes, we do have news here in about 40 minutes. So there is news coming up. And then finally, what's the futures market doing? And we're not going to see a whole lot of change there over the past few minutes, but we can check it again just to make sure for posterity's sake. And we still see the Dow down slightly, gold's down slightly, silver's even, crude's down slightly. So kind of a lean to the positive side for the U.S. dollar, but overall we're mixed. So what do we do? Well, big thing I see is 60.44. This is a key channel. It's a 2 of 3 channel that we've broken through 60.10, and we're now here at 60.44. And for those of us that have been with Forex Joe for a little while now, we know that the 60.44 holds a lot of significance. So this is a big number that we've got here at 60.44. So for me, personally, I'm going to mark this as a key level. Next one down we've got is 60.10, and then of course 6,000. So we've pushed up. We've got news coming up in 40 minutes. Do we have some opportunity to trade prior to news? Are we just going to chop around at this 60.44 level? I don't know. We have broken above it. We broke above. So we had some good momentum, broke through, and just kept retesting. It finally broke above, and now it's rejected, and it's below. We got confirmation, closed below. So on this candle, I would have parked this sell right here. It broke through, and now it's struggling again. If it can stay above 60.44, so for me personally, knowing we had been trading below, we've kind of exceeded the range, the normal range for this currency pair, and this is just me kind of talking out loud, right, for my thought process, but I'm actually going to sell. I know that's contrary to what we would normally see with this, right? You break above, we've got support, resistance. It should have, we broke below, we would expect to see resistance selling here, so we're trading above it. I'm actually still going to sell off of this to see if we can't grab a few pips on the way back down. And the reason I'm going to sell off of here is a number of reasons. Number one, the futures market is kind of leaning to the downside. It's still very mixed, but we are seeing some dollar strength, so that's number one. Number two, 60.44 is a key level. We've been trading below it, and we're just now pushing up to test it. So for that, I would expect to see more of a bounce back down to come back down towards this 60.10, which was the daily channel top, or 6,000. So I'm going to sell off of 60.44. I'm still going to keep my stop loss pretty tight, right here at the top of what this range has been. So I'm going to look to sell off of this. As far as buys go, depending on if we can get there before the news occurs, I would look to buy off of 6,000, which is a key whole number. And you typically see these whole numbers. You see price stop, struggle around those. So for me, if price can get down to 6,000 before the news, we'll look to we'll look to buy from there and take profit obviously quickly at that 60.10, and then I'll look to stretch it out a bit for take profit too. So that's what we have on. If that doesn't come into play, if we don't push down here at least 15 minutes prior to news, then I'll cancel these trades out so that they're not just sitting on and open. So there we have that one. And then lastly, let's look at one more currency pair. We can go even quicker for the last one. It doesn't take long if you're not talking and going through this. It doesn't take you long at all to go through these various currency pairs. It can be done very, very quickly. So let's do the odd USD and just kind of blow through that one pretty quickly here to see what we can find for potential trades. And then I'll turn it over to Forex Joe to do some bit of his commentary, and then we can wrap it up. So I know you guys have other things that you could be doing today or possibly are doing today. So let's see what we have for the Aussie USD. Current price is 95.09. And the channel information tells us, if we can get down there, here we go. Channel information is telling us that we have a channel top at 95.48. Channel top at 95.48, and that's a 3 of 3 channel, by the way. That's a significant channel level. Let's make a note, 3 of 3 channel. And then down below us, we have our channel bottom at 94.76. Now, we didn't park a trade on this last night because we had a couple of Aussie rate statements coming up last night, so we didn't park a trade here to see how that would play out. But we do have 95.48 is a 3 of 3 channel, so that's a big number for us. Support resistance information, well, what do we have? We've got 94.98 down below us. Support level, no surprise, whole number, 9,500 area. If we break through that, we've got 94.78, which is right there near our channel bottom of 94.76. To the upside, we have 95.46, which is right there near our channel top of 95.48. Are we trending or oscillating for the day? Well, we pushed down really hard coming into the Asian session. We pushed up really good. Didn't quite make it to our channel top up here, and pushed down. Looks like we broke through 94.76 a little bit, and then have pushed back above it. So trending or oscillating for the day. Looks like we're oscillating overall. Has the channel been broken? That's the big question, and the answer is no. I mean, it was. I shouldn't say no. That's not really true. Yes, the channel was broken. It was broken to the downside. Price broke and closed below right here, pushed back up, broke, closed below again, and then now has rallied over the course of the London session back up. So channel broken, yes. Average range, well, average daily range today, we've moved 74 pips, 73.9, 74 pips, and that's on an average range of, here lately, 50 to 55 to 70 pips. So average range has been pretty darn low. This currency pair prior to the, to the summertime blues is only moving, 90 pips-ish. So still got some room to grow, don't we? News coming up. Yes, we know there is news coming up, and we're mixed in the futures market. That's not going to have changed too much. Wouldn't really expect any change there for at least 15 minutes from the, the pit traders are coming on now, but we may not see anything until after that news at here in half an hour. So as far as that goes, not a whole lot of change in the futures market. You can pop over there just for posterity's sake and have a quick look, and see that we're still just chunking along pretty darn level here in the futures market. So what does that tell us? Well, we've got still got our channel top up here at 95.48. So we do have a 3 of 3 channel, which is a big number. First thing I would look to do is if we can push that high, I would look to sell off of 95.48. It made a run for it earlier, didn't quite get there. And, if we push during this session up to here, there's a couple of things working for us. One, it's a 3 of 3 channel. Two, we would really be pushing what is our normal range for this currency pair under current conditions. So if price can push up to this high, this would be a great spot for me to look to sell off of. there's no high impact. Well, there is high impact news coming up. If we push there during the news, then this would be a great spot to sell off of. So we'll put it on now. I doubt it'll rally that high, over the next few minutes. But this is a trade we can put on, take off, wait for news, and then put it back on. So let's have a look here. So we'll look to sell off of that 3 of 3 channel. That's number one. And then number two is looking for our other support and resistance areas. Well, 94.76 is held up very nicely. But what do we have that's a little closer to us? Well, we have 9,500. 94.98 was pushed through, came back. It's been retesting this area. And so if we were to compress the channels a bit, as Forex Joe says, compress the channels, what we'll do is move this down, and we can look here at 9,500 for a buy, which is a little bit shorter term trade, and see if we can't take 9 pips or so off of that as we hover around this key area. That's kind of a dangerous trade right now. But let's put it on 9,500. Still, should be good enough for a bounce, at least initially. Now, again, if this trade doesn't hit in the next 15 minutes, then I'll pull that off, and we'll wait for news, and then we can go back in from there. So that's what I've got. That's my interpretation of the daily regimen and how we would apply that with Forex Joe's daily reports and his Forex alerts. So there you have it. Forex Joe, anything you'd like to add?
Yeah, good morning, Brian. Good morning, everyone. I'm going to kind of cover some areas very quickly. First and foremost, this news event that we're getting ready to have might continue the trend of the euro-US dollar staying probably below 34.80 to the 34.55-60 range for the rest of the day. That's going to be the ISM non-manufacturing PMI. Anything above 50 indicates an industry expansion. So the numbers actually going to be 54.2 is what they're forecasting. It was 54.4 previous. So if we get a number right around that area, I would look along to watch the Dow and gold for the rest of the day if you're trading, and just scout for the rest of the day going into the reports. Now, starting Wednesday night, I'll probably do 2 reports Wednesday, 2 reports Thursday, going into non-farm payroll into Friday morning. One of the areas to take a look at is on the Bank of England rate decision. No policy change is expected from the Bank of England. The key will be if they're going to do the forward guidance policy and what Carney says. So Carney's going to be talking, and he's going to be talking about that they will not probably raise the interest rates in the UK until 2015. So it'll be interesting to see what he says. He thinks that the economy is improving, and this might help stabilize the Bank of England and that currency, the pound, and hopefully get us below 60.44 and 160. The key to that's going to be what happens with non-farm payroll and some of the other areas. Now, the ECB is going to be interesting on Thursday, folks, because they're talking about, first of all, I think they're going to keep the policy unchanged, but I think they're going to convey a message and start talking about the fact about having another rate cut. I think this rate cut could possibly happen in December. That's probably about a 30 to 40% chance, but it's probably about 75% chance in January or February. So it'll be interesting to see what Draghi says in his press conference. So again, on Thursday, you'll have the Bank of England, you'll have the ECB announcement, and then always we get Draghi's press conference afterwards. That will be kind of a key to get some movement. Then we'll go into the non-farm payroll. Non-farm payroll again will be on Friday morning. It increased to 148,000 in September. That was lower than what they were anticipating. We are looking for somewhere of a number around 126 to 130,000 because of what happened with the shutdown, what took place. Also on Friday, that'll be interesting on Friday afternoon for anybody that will be trading Friday afternoon before the Dow closes, was that Ben Bernanke is going to be speaking in Washington. Now, he may address the recent government shutdown and the Fed's recent decision to keep its asset purchase plan intact, quantitative easing. Now, that will be kind of watched for those of you that might be trading and are scalping during live events. Those of you that will be shutting down, remember, Monday is Veterans Day. We also have the markets that will be closed in France and also in Canada. So Monday will be a slow day, so they might be kind of dissecting what he says going into this weekend, and we'll have more about that later on in the week. I just put out a roundtable report. Those of you that get the roundtable, you should take a look at it. There's a lot of information. There has been some questions. I actually wrote some questions, answers to questions, and I thought they got sent out, and I apologize. Some of them didn't get sent out. I've been going 100 different ways, and sometimes I space out, forget things. So I kind of answered some of the questions in the roundtables market today. So let's kind of cover some of the questions that some of you had here, and we'll kind of go through it. Somebody was asking about tapering, the Fed's tapering, and what effect it will have in the markets. Well, I talk about this today in the roundtable, but let's do kind of a Reader's Digest version. Tapering, when it happens, I don't think it's going to have too much of a negative impact on the stock market. I think the stock market's going to love the fact when they start tapering because they're in a bull market. I do believe that there'll be a little bit of a dip, but then we'll have more buying because there's a lot of cash on the sidelines. One of the other areas to take a look at, it will be gold and how gold responds to the taper, and that will especially have an effect on the Aussie dollar. I think it will have a major impact short term on the Forex market whenever they start. I think it will show dollar strength. I think it will also put it in a position to have movement, and I think the market should celebrate tapering and look forward to it happening, but be prepared in advance. Now, the key is, when is this going to start? We've heard that, in fact, one of the Fed governors came out yesterday talking about that it could happen in December. I just believe that's Fed speak. I do not believe there's any way on God's green earth it's going to happen in December. What will take place is what the political spectrum will be in January when we have the possible shutdown again. I don't look for another shutdown because of what's happening here with the Affordable Health Care Act. I talk about that also in the roundtable. You need to read my version of what I think, what I know, and what I can prove on that. I do believe that there is going to be more of an issue in a debt ceiling in February. The debt ceiling battle in February is going to dictate whether we will see tapering happen possibly as early as March, or whether it will be extended into May or June or beyond. So once again, write that down. I don't believe that the government is going to shut down in January under current market conditions because of the Affordable Health Care Act and what's happening there. I talk about that in the latest roundtable report. I do believe that the debt ceiling is going to be a battle because they need some type of budget. You got to understand that the United States has not had any type of budget, yearly budget now for, 4.5 years. So I think that's going to be more of a battle. That battle will probably dictate whether they will start tapering as early as March or all the way back to May or June for next year. The Federal Reserve has made it abundantly clear, numerous occasions, that it will only begin tapering when the economy is on a robust and stable footing. That's not exactly what's happening under current market conditions. They're looking for some economic growth above a certain trend. They're looking for unemployment to go down, and what we have right now is we have a bunch of confused people that's doing battle that's being elected officials. They're looking for the economy to become a little bit stronger. So even though the economy's prodding along with $85 billion a month being sent into the system, we're not exactly where we need to be. There was a few other questions talking about the right or correct entry and exit points for each positions that you have. And this is and always will be very important. If you're brand new to the area, in our daily report, at the bottom of each one of our daily report, we have kind of a guide of what you need to be depending on the trading style that you utilize, what your stop loss should be. That's in each one of our daily reports. We also have this online in the members area. We've talked about it at length. All you have to do is look into the archives, and there will be plenty of information for you to take a look at that situation. So the bottom line is find something that's going to work for you and stick to the plan. You need to determine what your trading style is going to be, and then you're going to limit your risk by using stops, and you're going to be very consistent in your trading. The reason for having a practice regimen account is so that you can explore the various type of trading styles to see where you're most comfortable. One of the other areas is make sure that you come to these classes and do what Brian's showing you, and also the non-farm payroll on Friday morning, and experience it. There are going to be some people that will attract or gravitate towards scalping and day trading, and you'll love it. There'll be other people that will not like the swings and not really care for it. You're more of a swing position trader. Each person is different. That's why we teach all the different trading styles. But what you need to do in trying to locate the right entry and exit point for each of your position is going to be using the tools, the trade plan alerts, the daily reports, the information that Brian's given out when he has these classes, what we do in non-farm payroll, and you have a plethora of information at your fingertips allowing you to get into the markets. Now understand, there's going to be currency pairs. It's always going to move higher than the highest high and lower than the lowest low. This is called breaking out of range-bound trading. We've had range-bound trading now for a period of time, but we're going to be breaking out of these range-bound trades very, very soon in certain pairs. So try moving your stops once you're in a trade. Especially, we've set this system up with the software so it takes out human emotion, fear, and self-doubt. You see, if you have a game plan and you enter a trade and you have a set risk in advance, then you shouldn't have to make decisions on the fly, because all this is going to do is increase your risk. And while you're in a trade, you're going to get emotional. When you get emotional, you're going to make mistakes because you're inexperienced, and this is where you fail. So you could end up having or making bad judgments, and before you know it, you end up losing 2 or 3 times what you initially planned on risking because you're inexperienced and you don't have enough vast experience doing trades in live current market conditions. Everything we've done here at 21st Century Forex Trader is allowing you to have repetition. Repetition is the mother of skill. We're giving you an opportunity to execute trades in live current market conditions on a consistent basis. Now, we found that it's better to take a small loss and look for the next opportunity instead of trying to force a losing trade into a winner. You can become very religious using that in that capacity. I've seen many people come very religious trying to do that format. So basically, follow the plan. Do everything that we're doing with the what we offer with the information that we give you. Practice, practice, practice. Start out with the euro US dollar. Pick one currency pair that you can stock. Get good at that. Don't become a jack of all trades and master of none, so to speak. Focus in certain areas. Hone your skills, and then you can always expand your horizons. Then we had one of our clients that's been with us for a period of time who asked a question, and kind of wrote a couple questions in here. Now let me kind of cover this. They were able to achieve rather consistent gains for over 23, 26 weeks now on a strategy that they're using and is automated. They are currently in the 1,000 pip per month area. They've joined the 1,000 pip club. Congratulations. They've been doing computer back testing. It's revealed that they're better off taking all the setups. Now, all the setups means all the trades of the currency pairs that they are trading that appears from the trade alerts, from the daily reports, from all the information that they're using. This is a setup that they're using even if they may give back some from the higher gains of the week because they leave pips on the table by not taking all the setups as they come on other weeks. So here's their dilemma. In the present trade environment, which looks a lot like the summer months extended, they said they're trying to use a math probability rule of thumb, if possible, to know where a certain number is achieved based on the current ATR or something of that nature, to hone in on an advantage based on a probability time to stop. This is a loaded question that has plenty of answers. Okay, so I'm going to try to keep this simple because it can be very confusing. They go on to talk about that recently they had a day where they made over 400 pips and stopped, but it was a gut thing, which could have went either way. So in other words, they got a gut feeling after doing 400 pips, and if they continued, they would have given back around 100 pips. It was still a great week, but they were better off stopping. So they're asking me, since I'm a math probability man, do I have a mathematical way of looking at this, or are they kidding themselves that it is reasonable to do? In short, what they're looking to do is when to hold them and when to fold them. Two things. Number one, trust your instincts, especially on the currency pairs that you are studying, the currency pairs that you are honing your skills on, and make sure that, and let's put this in perspective. Let's say overall you're trading, let's just pick an arbitrary number. Say you're trading 5 pairs. Of the 5 pairs, you're very good at having instincts on 2 of the 5 pairs. Treat the 2 pairs, and let's say for this example that it's the euro dollar and the pound dollar, you have a lot of success. Trust your gut instincts on those. On the other 3 pairs, once you get to a certain level, determine what that level is, then you cut back. So in other words, if you are trading, and then let's say in a period of time you've reached X amount of pips, and you revert back and cut it in half. You see, there's going to be days when you have movements, especially in range-bound markets, that you'll be able to pick up 200, 300, 400 pips, depending on the number of pairs that you trade. There'll be months where you'll pick up 1,000 pips or more. The key to having success consistently and not really getting or becoming greedy is understanding the framework, because your opponent is yourself. I tried this on many, many pairs. We tried to come up with, and here's what we found. The Forex markets change on a consistent basis, and so do the numbers, as far as trying to figure out when is it time to stop or when is it time to continue on. But this is what we came up with. If you get a pair that is trending, and a trending pair to me is any pair that moves over 300 pips in a week, then I'm going to ride that a lot more than I would if the markets are range-bound. If you're in a range-bound market, let's take, for example, what happened today with the Euro-US dollar. I think the Euro-US dollar only moved about 50 pips when I put out the report. But then, as the session progressed, we broke below, hypothetically, say 34.70. We dropped all the way down to about the 34.60 range. We came back up, and then we hung around to where it's now right around 34.67. We created a new low. What you're looking to do is that you have to use sessions. So in other words, this is why I'm always teaching sessions. There's always the Asian session, London session, U.S. session. So let's say if you're trading during this U.S. session, you have the opening, then you usually have a set of news right after the opening, usually at 7:30 Central, 8:30 Eastern. Then you have the Dow that markets, the Dow that opens at 8:30 Central, 9:30 Eastern. Then you're going to have, like today, another news event here in 10 minutes, and then 2 hours after that you have the London close. So I'm dividing these so-called sessions up within a session. I'm trading the U.S. session, and I'm dividing a session up within a session and trying to look at what the rule of thumb is and what the probability factors are of the number of pips. This gives me an opportunity to not get caught up in the fact that I've made 300, 400, 500 pips, but I'm still looking at the opportunities and using those opportunities. And then if I get a feeling, and this happens, okay, you'll get that gut feeling that you either need to be in or that gut feeling that you need to be out. Respect the feeling if it is on the currency pairs that you study. Respect it. If it's not on the currency pairs that you are stalking or that you study, but let's just say that you're trading these because it might be that all the yen crosses are moving and you're trading the pound yen and the Aussie yen. Do not stick to your guns too much, because they could be more volatile and they could come back because of your inexperience, and this is where you will see more of the wins at this point. In this example, they made 400 pips. They would have lost 100 under this scenario. That's still 25% of what you made. When you put it in perspective, and you made 400 pips, and there would have been an opportunity to lose 100 pips, that's 25% of what you could have made in a day. You see how you're putting the numbers into perspective? When you start thinking about it, if you just think about making 400 pips in a session because of the movement of the currency pairs, and you would have given back 100 pips, it doesn't sound too bad. You've still made 300 pips. But when you start putting mathematical percentages on it, okay, I made 400 pips in this session, but if I would have continued, I would have lost 100 pips. 100 pips of 400 pips, you would have lost 25% of the portfolio for that session. That brings a whole new perspective. So what you can do is use percentages. So as you're going and generating positive pips, maybe you got to 400 pips and you make the fundamental decision, okay, I'm only going to lose 10%. I'm not going to go over 10%. So then you cap it off at 40 pips. And I think everybody should understand this. And if you don't understand it, then, write in the questions. Let me explain it a little bit further. But the bottom line is, as you put it into percentages, that is the mathematical probability factors that you're missing out on. So in other words, if you want to put the pedal to the metal, there's nothing wrong with that if the markets are moving. But sometimes, and if you put this into a perspective, if you're trading, let's say that you get up and let's say that you start off and you're trading the Asian session, and you make X amount of pips and then you stop. Then all of a sudden you wake up, alarms alert you, and you get in the London session, and it's the opening of the markets, and you do it again. Then you get into the U.S. session. Now all of a sudden you're up 300, 400, 500 pips, and the markets are just rocking and rolling. Everything you're touching is turning to gold. But now we're getting near the London close, and we got a news event here in 10 minutes. Now we got to make a decision on if we have trades open here in 10 minutes. Do I want to leave these trades open with this news event? What do I want to do with the London session? Well, I'm going to put it in perspective. I'm going to take a look and say, okay, and we're using this hypothetical number. I've generated 400 pips. Well, I'm going to now take a look at this and say, once again, I only want to lose 10% of this 400 pips that I've generated today. That's 40 pips. I've now got a 40 pip cap. I now have a game plan in place. I'm going to keep putting the pedal to the metal. But if I lose that 40 pips, it's shut down immediately. There's no hesitation. There's no procrastination. You do it. And if you do that on a consistent basis, whatever that number is, you will maximize the profits. That's the Reader's Digest version explained in a more detailed outlook of what you need to do to make sure that you're successful. And hopefully that answered the question. If you got any more comments or questions, put it in there, and I'll be happy to answer them. There was a few other questions. Let me make sure that because there was a couple other things I wanted to go over. Somebody has been talking about, what I believe on what's going to happen here with these markets. I don't know as far as what's going to happen. All I can do is say, and I talked about this here in the last couple of roundtables. I give you ranges for both buys and sells if it breaks out. Remember, we don't care what direction it goes as long as it moves. If it moves, then we are prepared. Because if it moves, okay, the markets are going to dictate instead of me. I'm going to become emotionally unhinged if I'm trying to figure out which direction the markets are going, and I get locked into one direction. But if the markets are going to dictate what happens, I'm just going to allow it to take me along for the ride. So if I take and go along for the ride, then I have a game plan in place that gives me an opportunity under current market conditions to prosper. So it doesn't matter to me if it goes up or down. We have the system in place. We have the thermal grids. With the Fast Track Trader, we got all the information in the Forex Trader Pro. We got all the trade alerts. We got all the information. Brian walks through this process each and every day. It's repetition, repetition, repetition. Each and every day, we're doing the homework. Now, we're keeping the homework simple. As Brian alluded to earlier, he goes through more of a detailed orientation each and every day to kind of walk you through the process. But once you get used to this, you can go through 10 currency pairs in 15 minutes or less. And I would never encourage anyone to trade over 10 currency pairs at one time. Yes, let me repeat that. I would never encourage anybody to try to trade over 10 currency pairs in one time. You can mix and match those 10 currency pairs, because there might be a week where the CAD yen or the Aussie New Zealand dollar might be moving, and you might want to include that in your 10 pairs. There might be other weeks that the four majors may not be moving as much, but you got the pound yen, the Aussie yen, or the Euro Aussie that are moving, and you want to include those. But I would never, ever try to go past 10 pairs, because this ensures that you keep your focus. It's hard enough to focus on just the Euro, US dollar, and the four majors and get good at what you're doing, and that's why we always ask you to pick a currency pair to stock, than it is to try to just come out here, and as I alluded to earlier, and I made an astute statement, jack of all trades but master of none. I want to make sure that I maintain my focus. It gives me the best opportunity to build a portfolio. There's going to be times that you're wrong, and you got to minimize the risk. What happens is, if you're going to continue to focus on the times that you're wrong and let it affect you, then you're never going to progress. So, to keep it simple, always have the game plan in place, always have the numbers, pay attention to the numbers that we have, and in that way, when the markets dictate what's going to happen, you're not sitting there trying to figure out what's happening on the fly live in the markets. There isn't a trader alive unless they have been doing this and is a professional that can accomplish that task. This is why a high percentage of people fail. They have early success, unrealistic expectations, and then they don't think they need a coach or mentor or anything. They think this is quite easy, and they get absolutely waxed in the markets. Most of you understand that now. But if you stay the course, if you keep it simple and you follow the process, and you continue to do this day after day after day after day, and it becomes constant repetition. But folks, you're talking about generating an above average upper echelon income in today's crazy world. It's not really that bad. And yet, sometimes the human mind plays Jedi mind tricks, because when you're talking about this many hours of the markets being open, we have to keep ourselves preoccupied so we do stay focused instead of watching 15-minute candles or 30-minute candles open and close. And trust me, I've seen a ton of people do that. And then they get stunned because it's paralysis by analysis. This is why you must always have a practice regimen account and practice your trade, so that when you are ready to put this into a live account and you feel comfortable in doing that, you are the most prepared person around for your portfolio, because that's your number one goal, to build your portfolio. Brian, I don't see any questions. Looked like I did a good enough job of explaining that. Everybody have a blessed day. I don't know when the next class is before Friday. Brian, do we have any classes before Friday? If not, we'll be back here on Friday.
No, Friday is it.
Okay,
yep, today and then Friday.
We'll be back here Friday morning. And like I said, starting tomorrow, you'll probably get 2 reports on Wednesday, 2 reports on Thursday going into non-farm payroll. If the markets don't move much, this will only be the only report that you have this morning. If you got the round table, read the round table in detail. There's a lot of information in there, and hopefully I answered all the questions. Back to you, my friend.
All right. Well, thank you very much, Forex Joe. Great having you on, and thank you for taking time to answer those questions. And we will wrap it up. We'll be back here for non-farm payroll to trade live, applying the exact same methodology. And so we will see you then. In the meantime, trade safe and follow your rules. We'll talk to you soon. Have a great one.